something significant just happened with Social Security that is going to affect millions of retirees across this country. The Social Security Administration announced changes that could put an extra $500 a month into the pockets of qualifying recipients starting this February. But before you start making plans for that extra money, we need to talk about who actually qualifies for this increase and what it really means for your specific monthly check. Before I break down everything you need to know about these changes, I have an important request. This channel is dedicated to helping you understand your Social Security benefits and navigate the confusing world of retirement income. But I have noticed that many people watching these videos have not yet subscribed. If you want to stay informed about changes that directly affect your benefits and your money, please take just 2 seconds right now to hit that subscribe button and tap the notification bell. When important Social Security news breaks, you will be the first to know. Subscribing is completely free, and it genuinely helps me continue creating these informative videos for you. Now, let me tell you the whole truth about what is really happening with your benefits. Here is something that might surprise you. The Social Security system is not designed to make things easy for you to understand. It is built on layers upon layers of regulations, cost of living adjustments, and eligibility requirements that would make your head spin if you tried to read through all the official documentation. That is exactly why I am here today, because somebody needs to cut through all that bureaucratic confusion and give you the straight facts about what is really happening with your benefits. When we talk about this $500 monthly increase, we are really talking about several different factors coming together at once. First and foremost, there is the annual cost of living adjustment, which you probably know as COLA. This year's COLA is sitting at 2.5%. For many of you, that translates to a meaningful increase in your monthly check. But here is where it gets interesting, and this is where a lot of people get confused. The COLA is not the only thing affecting your Social Security payment. There are also adjustments happening to the earnings limit for those of you who are still working while collecting benefits. There are changes to the maximum taxable earnings cap, and there are modifications to how certain supplemental benefits are calculated. Let me break this down in a way that actually makes sense. If you are currently receiving the average Social Security retirement benefit, which right now sits at around $1,927 a month, that 2.5% COLA is going to give you roughly an extra $48 each month. Now, I can already hear some of you saying that is not $500, and you are absolutely right. That is because the $500 figure applies to specific groups of recipients who are getting more than just the standard COLA increase. We are talking about people who fall into certain categories, those receiving maximum benefits, individuals who qualify for both retirement and disability supplements, folks who are eligible for special adjustments based on their work history or family situation. Here is the reality that nobody wants to talk about. Social Security was never meant to be your sole source of retirement income. When the program was created back in 1935, it was designed as a safety net, not a retirement plan. It was supposed to keep elderly Americans out of poverty, not fund comfortable retirements with travel and hobbies and all the things you dreamed about doing when you stopped working. But somewhere along the way, we lost sight of that. And now, millions of Americans are depending almost entirely on their Social Security checks to survive. That is why understanding every dollar of your benefit matters so much. When the SSA announces changes like this, you cannot just glance at the headlines and assume you know what it means for you personally. You have got to dig deeper. You have got to look at your individual situation and figure out exactly how these changes apply to your specific circumstances. Let me talk about Medicare premiums for a minute because this is where a lot of people get blindsided. Every year, your Medicare Part B premium gets deducted directly from your Social Security check. For 2025, the standard Part B premium is $185 per month. That is an increase from what you were paying last year. So even though you are getting a COLA increase on one side, you are seeing a premium increase on the other side. The government calls this the hold harmless provision, which is supposed to protect you from having your net Social Security payment decrease because of Medicare premium increases. But let me tell you, when you are living on a fixed income, any increase in what you are paying out feels like a decrease in what you are bringing in. This is why I get so frustrated when I see news reports talking about these increases without explaining the full picture. Yes, your gross Social Security benefit is going up. Yes, the numbers look good on paper, but what matters is what actually hits your bank account after all the deductions. For many of you, that net increase is not anywhere near what the headlines suggest. You have got Medicare premiums. You might have taxes withheld if you elected to do that. And if you are in a higher income bracket, you could be paying income-related monthly adjustment amounts that increase your Medicare costs even further. Now, let me explain who actually qualifies for that larger $500 monthly increase, because this is crucial information. If you are someone who has consistently earned at or near the maximum taxable income throughout your working career, your benefit calculation is going to be significantly higher than average. The maximum Social Security benefit for someone retiring at full retirement age in 2025 is $3,822 per month. If you are in that category, a 2.5% COLA gives you about $96 more each month. But that is still not $500. So, what gives? The answer lies in combined benefits and special circumstances. Some of you are receiving survivor benefits on top of your own retirement benefits. Others are getting supplemental security income in addition to regular Social Security. There are people who qualify for disabled adult child benefits or widow benefits that stack with other payments. When you add up all these different streams of income from the Social Security Administration, that is when you start seeing monthly increases that can reach or exceed $500. But you have got to understand that this is not one single payment increasing by $500. It is multiple benefit streams all getting adjusted simultaneously. Here is something else that is really important, and I want you to pay close attention because it affects when you will actually see this money. The effective date of February does not mean everyone gets their increase in February on the same day. Social Security payments go out on a schedule based on your birth date. If you were born between the 1st and the 10th of the month, you get paid on the second Wednesday. Born between the 11th and the 20th, you get paid on the third Wednesday. Born between the 21st through the end of the month, you receive payment on the fourth Wednesday. And if you have been receiving benefits since before May 1997, you get paid on the third of each month. This staggered payment system means that while the increases are effective in February, the exact date you see the money in your account varies based on your specific payment schedule. Let me address something that is critically important for your financial future. Financial literacy among retirees when it comes to their own benefits is shockingly low. I have encountered people who have been collecting Social Security for 10 years and still do not understand how their payment amount was calculated. They do not know what their full retirement age is. They cannot tell you the difference between taking benefits at 62 versus waiting until 70. And they have no idea how working while collecting benefits affects their payment. This lack of understanding costs people thousands and thousands of dollars over their lifetime. If you took benefits early at age 62, you accepted a permanent reduction in your monthly payment. That reduction does not go away just because you reach full retirement age later. You are locked into that lower benefit amount for life, with the only increases coming from annual COLA adjustments. Now, I am not saying taking benefits early is always wrong. Sometimes it makes perfect sense based on your health situation or financial needs. But you need to understand the long-term implications of that decision. Every year you wait to claim benefits between your full retirement age and age 70, your benefit increases by 8%. That is a guaranteed 8% return, which is better than just about anything you are going to find in the market without taking on significant risk. This brings me to a point I want to emphasize because it affects how much you benefit from announcements like this one. The decisions you made years ago about when to start taking Social Security still impact you today. If you took reduced early benefits, your COLA increases are calculated on that reduced amount. If you waited and maximized your benefit, your COLA increases are calculated on that higher base amount. It is the difference between getting 2.5% of $1,500 versus 2.5% of $3,000. The same percentage yields wildly different dollar amounts depending on your starting point. Now, let me address the working seniors out there because this is a group that often gets overlooked in these discussions. If you are under your full retirement age and you are still working while collecting Social Security, there is an earnings limit you need to be aware of. For 2025, that limit is $23,400. If you earn more than that, Social Security withholds $1 in benefits for every $2 you earn above the limit. But here is what most people do not realize. That money is not lost forever. When you reach full retirement age, Social Security recalculates your benefit to account for the months when benefits were withheld, and you get credited for that. But in the meantime, it can feel like a penalty, especially if you are counting on that income to cover your expenses. The year you reach full retirement age, the earnings limit jumps significantly to $62,160 for 2025. And the withholding formula changes too. Instead of losing $1 for every $2 over the limit, you only lose $1 for every $3 over the limit. And this only applies to earnings before the month you reach full retirement age. Once you hit full retirement age, there is no earnings limit at all. You can earn any amount, and Social Security will not withhold a penny of your benefits. Understanding these rules is critical if you are planning to work during your retirement years. Here is something that concerns me deeply: the future solvency of the Social Security system. According to the most recent trustee reports, the Social Security Trust Fund is projected to be depleted by 2033. Now, that does not mean Social Security goes away completely. It means that the program will only be able to pay out what it collects in payroll taxes, which is estimated to cover about 79% of scheduled benefits. We are potentially looking at an automatic 21% cut to everyone's benefits unless Congress takes action to shore up the system. This is why I tell people you cannot rely solely on Social Security for your retirement security. You need other sources of income: pensions, retirement accounts, investments, whatever you can build for yourself. Let me wrap up with some practical advice that applies regardless of where you are in your Social Security journey. First, create a My Social Security account on the SSA website if you have not already. This gives you access to your earnings record, benefit estimates, and important documents. Second, review your earnings record for accuracy. Mistakes happen, and catching them early prevents problems down the line. Third, understand your full retirement age and what it means for your benefit calculation. Fourth, if you are married or divorced, explore spousal and survivor benefits to make sure you are maximizing what you are entitled to receive. Fifth, consider the tax implications of your Social Security income, especially if you have other sources of retirement income. Sixth, plan for the reality that Social Security alone probably will not be enough to maintain your desired standard of living in retirement. The bottom line is this: yes, there are benefit increases taking effect this February. Yes, millions of people will see more money in their Social Security checks, but the details matter enormously, and your individual situation determines exactly how much you will benefit from these changes. Do not rely on headlines or second-hand information. Take the time to understand your own benefits. Verify the numbers on your own statement. Make informed decisions based on facts rather than assumptions. Your financial security and retirement depends on it, and nobody cares about your money as much as you do. If you found this information helpful, please hit that subscribe button right now so you never miss important Social Security updates. Share this video with friends and family who need to understand how these changes affect their benefits.